Oanda for US Forex traders. 30 years clean, one proprietary edge. Worth your shortlist? Here's the answer. If you're a US retail Forex trader, your list of legally usable brokers is short, really short, and Oanda is on it. 30 years of continuous operation, NFA and CFTC regulated since most of you started trading, a platform lineup that's genuinely wide, and one proprietary feature you cannot get on most US regulated Forex brokers, a live order book showing where Oanda's own clients are positioned. Here's what's interesting though. The headline cost, 1.1 pips on Euro USD, sounds expensive. European ECN brokers quote 0.2 pips on the same pair. So the obvious question, is Oanda overcharging US clients by a factor of 5? Short answer, no. And the reason why is the whole point of this video. Regulation first, because for US traders, this is the gating question, not a footnote. Oanda is registered with the National Futures Association and supervised by the CFTC, NFA number 0325821. They've held that registration continuously since 1996, 30 years, no material regulatory incidents on the record. That matters in a way that doesn't matter for European traders. In the US, the NFA-CFTC regime is exclusive. Brokers who aren't registered cannot legally serve US retail clients. Full stop. Pepperstone, IC Markets, the entire roster of 0.0 pip ECN brokers everyone raves about online, they can't take your account if you're American. So the shortlist is genuinely short. Oanda, Forex.com, IGUS, a handful of others. And Oanda has the longest clean record of the lot. Outside the US, the license stack is multi-jurisdictional, 7 regulators total. FCA in the UK, IIROC in Canada, ASIC in Australia, MAS in Singapore, MFSA in Malta, JFSA in Japan, plus the NFA at home. Why does that matter even if you're trading under the US entity? Because it tells you the same broker has been audited by 7 different regulatory regimes for 3 decades and has come out clean each time. That's not a marketing line. That's structural credibility you can't fake. Okay, regulation, bomb-proof. Now the cost, because this is where most reviews get Oanda completely wrong. US clients see 1.1 pips average on Euro USD on the standard account. They Google Pepperstone, they see 0.2 pips. They conclude Oanda is robbing them. That comparison is broken. Here's why. Pepperstone's Razor account quotes 0.2 pips because Pepperstone operates under ASIC and FCA, regulators that allow much higher leverage, no FIFO rule, no hedging ban. The broker's entire risk model is different. They can run a tighter book because they're not subject to NFA constraints. The NFA caps US retail leverage at 50-1, bans hedging, enforces FIFO, first in, first out, which forces you to close older positions before newer ones on the same pair. Those 3 rules fundamentally change how a US broker has to manage its book. Tighter spreads become structurally more expensive to offer. So the apples to apples comparison isn't Oanda versus Pepperstone, it's Oanda versus Forex.com and IGUS. And on that list, Oanda is competitive. Here's the proof. Outside the US, the same broker runs an elite trader account that drops Euro USD to around 0.2 pips, plus commission. Same Oanda. Different regulatory environment, different cost structure. The 1.1 pips isn't Oanda's pricing decision, it's the cost of being legal in the US. Platforms. This is where Oanda quietly surprises. Most NFA-regulated brokers give you their proprietary platform and maybe MetaTrader 4. That's it. The door closes. Oanda offers 4 routes. The Oanda platform itself, built-in charting, research, and the order book feed I'll come back to in a second. MetaTrader 4 and MetaTrader 5, both. If you've already built EAs, indicators, or systematic strategies for the MetaTrader ecosystem, you don't have to rebuild them on a proprietary front end. TradingView integration. Orders routed through Oanda directly from inside TradingView. If you live in TradingView for analysis but need a US legal execution venue, that's a clean setup. And a public REST API. Documented, supported, designed for algorithmic trading. No minimum deposit required to access it. 4 execution paths under one US regulated roof. For NFA land, that's rare. Most peers force you onto one platform and lock the door behind you. Now the order book. This is the piece that's genuinely interesting. Oanda publishes a real-time aggregated view of its own client base's positioning, long versus short, by instrument, broken out by price level. You can see where Oanda's clients are loaded up, and at what prices they're sitting. Why is that useful? Retail positioning is one of the more honest short-term sentiment indicators in Forex. When 80% of a retail book is long Euro-US dollar at 1.0850, the contrarian read carries weight. Most institutional traders use commitment of traders data for this, but COT is weekly, it's lagged. The order book is live. It's not a magic indicator, it won't print money on its own, but as a sanity check on your own bias, am I leaning the same way the herd is? It's one of the very few proprietary data feeds you can get on a US-regulated Forex platform. Now the constraints that aren't Oanda's fault, but that you need to hear anyway. 50-to-1 leverage cap. That's not Oanda, that's the NFA. Every US-regulated Forex broker is subject to the same cap. If you want 500-to-1 leverage, you cannot legally get it from a US broker, and any broker offering it to US residents is operating illegally. No CFDs for US residents. Also not Oanda. CFDs are banned for US retail by the CFTC. Doesn't matter which broker you pick, you can't trade them legally as a US resident. No hedging. FIFO rule. Same answer. Regulatory, not broker. What this means practically: if you came here looking for high leverage, CFDs on indices and crypto, or hedging strategies, Oanda can't help you, and nobody legally can. The real question isn't whether Oanda is the right US broker for that, it's whether being a US retail trader is the right setup for that strategy at all. Often the answer is no. We opened an account under the US entity and tested the broker live. ACH deposit cleared in 2 business days, normal for US bank rails. Traded Euro-US dollar across 3 sessions, including the London-New York overlap when liquidity is deepest. Execution held up. No requotes, no unusual slippage. Spreads ran around the 1.1 pip mark during liquid hours, slightly wider into the close. Standard behavior for any broker. The platform itself is mature. It's been refined for 3 decades. It's not flashy, it's not modern. It is functional, stable, and built by people who have run a US Forex shop longer than most competitors have existed. So who is this for? If you're a US retail Forex trader, Oanda belongs on your shortlist. Period. 30 years of NFA, CFTC continuity, 4 execution paths, and the order book feed make it one of the most credible options inside the legal US universe. Forex.com and IGUS deserve to be on that list too, but Oanda has the longest clean record of the 3. If you're outside the US and pure cost is the only filter, Pepperstone, IC Markets, the ECN brokers running razor-style 0.0 pip accounts will beat Oanda on Euro-US dollar spreads. Not even close. The Elite Trader account narrows the gap, but if cost is the single variable, that's not where Oanda wins. If you need CFDs as a US resident, you can't have them. Not from Oanda, not from anyone legal. If you need leverage above 50-to-1 as a US client, same answer. Remember that 1.1 pip spread we opened with? Next to a Pepperstone Razor account, it looks expensive, but Pepperstone can't take your money if you're in the US. The right comparison isn't to the broker you can't use, it's to the brokers you actually can. And on that list, Oanda is one of the strongest names in the room. Final verdict, 8.7 out of 10. For US retail Forex, it's a shortlist broker. 30 years of clean regulation, 4 execution paths under one roof, and a proprietary sentiment feed you cannot get anywhere else legally in the United States.
Oanda earns its spot on the US retail Forex shortlist. Full review linked in the description.